Hey everybody, it's been a while since I recorded an analysis video. Basically, since Thanksgiving, there's not been much going on, but gold did have a big move last week. I need to examine that for you. Okay, if you're a subscriber, you'll know that I had a buy signal on the break above the previous high of 2072. My buy was on the break above 2075. And this time last week, we did rocket up through there. And we hit two of my targets, 10, 21, 13. Now, we went even further than that. We went to 21, 35. All was looking really good for the gold bulls. Now, when we pulled back to the previous high around the 2075, 2070 level, I suggested along there. I thought that this bullish breakout was going to be something that had triggered the next leg higher in gold. I'm going to show you the weekly chart in a minute and explain why I thought that was going to happen. Anyway, it didn't. We crashed back below 2070 and we gave back a little bit of the profit that we made on that big break above 2075. And then I said, leave it alone. I don't know what's going on. So when I don't understand what's going on in the market, I don't keep trading it and gambling and hoping. I literally had no idea. And what I said to you guys, or what I said to my subscribers was, if we close the day below Friday's low, which is at 2033, that for me would be an important sell signal. It would create a candle that I couldn't ignore, and that we should see further moves to the downside. Okay, so it was worth waiting for the Monday close to get that guidance from the daily candle. And we not only closed below the Friday's low, we closed below Thursday's low. We took out 3 days of price action, and of course we took out the whole morning price action as well. It really did look very negative for gold. Then we moved sideways for a little bit. I kept selling. I kept suggesting that we sell into any strength because eventually we would turn lower. And of course, on Friday, we did do that. And again, on Monday, we are doing that. So the outlook remains negative for me. We've even now moved below the October high, which is at 2009. This long upper week is obviously negative. It's a clear rejection of the breakout and the big red body as well, engulfing Friday's strong price action. And Friday was a really good big green candle. So we got an engulfing candle, long upper week, really could not be more negative. I don't tend to base trades on a single candle, not even on the daily chart. But in this case, I absolutely couldn't ignore it. I had to take it on board, and it is indicating that gold has got some significant moves to the downside still to come. Now, as a subscriber, you know that already. I would imagine you're holding a short position. I should certainly hope so, because I've been talking about gold going down ever since Tuesday open. On the weekly chart as well, I said to you, if we have a close in gold below the previous week's low, which was 2000, that would act as a sell signal for the start of this week. And we have that. We have a very similar candle, as you can see. The one that we had last week on Monday on the daily chart, we got a similar candle on Friday on the weekly chart. So I don't need to explain. But again, bearish engulfing candle, long upper week. So you can understand why I'm taking this as another sell signal. And because it's on the weekly chart, it's even more important. Now, on the weekly chart, you can see the previous peaks. I talked about this being a triple top, 2072. 2069, 2072. I talked about this being a potential triple top pattern. Well, it's not, because we broke above that. Triple tops don't often hold. And so when we did break above those peaks, I really thought, right, this is it. This is the buying signal for gold. And of course, I didn't know that this was going to happen, but I've waited and I've got a sell signal. On the weekly chart, this set of fibs don't look that important, but they are, because it goes all the way back to the last quarter of last year. So basically, these Fibonacci levels do represent the whole of this 1 year move. So they are important. And therefore, it is important the fact that we've also broken below the 23.6% fib on the weekly chart. Holding below 2000 is another negative signal for me this morning. And of course, we hold below last week's low, which is just under 1995. It's going to be another negative signal. So as I speak, we're trading in 1993. We are holding below all those three key levels. Pretty obvious from the weekly chart where the longer term target is. It's down at around 1940, 1935. We've got the 50-week moving average there. You've got these lows from November. So I would say that's a reasonable target if you're looking for a longer term gamble on the short position in gold. I mean, really, if you put a short position on now and you put a stop in above 2015, yeah, you're looking at around a 20-point risk. But when you're looking at a move of maybe 50 points to the downside, that risk reward certainly works. Risk 2 to make 5, we would do that all day long. Quick look at silver. It's not as clear because on the weekly chart, really, we're just moving sideways for so long, all the way back to 2020. This is basically a 3-year sideways pattern. I can't make much sense of it. Could throw some trend lines on there, but ultimately we just have been moving sideways up for 2 or 3 weeks and then we're down. Last week with the collapse that we saw on the weekly chart, we've got a huge bearish engulfing candle. So I would suggest that further losses are also likely in silver. Backs up my idea of what's going on in gold, but definitely not as clear. So I'm not going to say any more on silver. So I did put some sell levels on my trade sheet yesterday for today's trading. We didn't quite get to 2009 in gold. We got to 2007 this morning. So we kind of missed that sell opportunity. As long as we hold below 2000 and 1995, the outlook is negative for gold. I did also put on the sheet sell a break below 1995. And the first target I have for the short position for this week is 1995. Wouldn't be surprised to see us get to 1945, 1940. Silver, I've got some sell levels on there as well, but we haven't got close to those. I'm going to have a look at the New Zealand dollar versus Japanese yen. That's another trade that I've got on the sheet. Let's have a look why I chose to sell there. That's actually been triggered this morning. Okay, there's too much sideways action going on in Forex markets. I'm really struggling to find really great opportunities. I'm struggling to find trades that we can run for 2 or 3 days and make 100, 150 pips out of them. We haven't done too badly, but I will admit it's been a struggle. And last Monday wasn't a great day. It took me 2 or 3 days to make that up and get us back into profit. Today, we are seeing a break above this trend line. I took that as my sell opportunity, broken above it. It wasn't the greatest trade, to be honest, because it's midpoint, but I just thought we might come up, hit these moving averages in the trend line and turn around. I'm going to have to see if we come up and test the upper trend line of this channel, which goes back to July, or whether we come back down and test the lower trend line of the channel. Another trade I've got on my sheet, which is actually just being triggered, so I'll need to put that in green, is a sell of the euro yen. We've had a good bounce in the euro yen after a significant collapse last week when the Bank of Japan indicated that they might be closer to raising rates than we initially thought. So the yen rocketed against all the currencies. We've had a little bit of retracement, which I'll show you now on the hourly chart. My sell level is at 157.30, 157.50, stop above 157.70. Why have I chosen that level? It's all down to the Fibonacci levels of the most recent move from mid-November. So I've broken down all my fib levels on there. We've got an area of confluence here around 157.30, 157.50. And because we've got the 100-hour moving average there as well, I figured it was worth a go. I'm trading in the direction of the trend with this, or what I believe is the trend anyway. Unfortunately, I don't really have a trend line to rely on there, so I'll get rid of it. Again, not the strongest reason, but at the moment, there are not great opportunities in the Forex market with all the sideways action that I talked about earlier. We're getting a little bit overbought on the slow stochastic on the 1 hour chart as well. Helps me to feel a little bit more confident in this. I'm looking at the 4 hour chart as well, and we're just getting into overbought territory there. So, it's worth a gamble, I think. Well, we're in the trade now anyway. We're holding the level. Let's hope we turn around and head south. The obvious target would be around 156.60 and maybe 156.00 is not out of question. It really would be a lovely trade if we could get down there. I'm also looking at a shorting opportunity in the dollar versus the yen with this significant bounce back. I mean, really, we're coming back to the break point here that we had last week when the market did collapse. So I think you've got to give it a go. Because we're coming back to this area, you can see from the price action, we should have resistance around 146.60, 146.80. We've got the 200-hour moving average as well around there. It's a 50% fib, which I don't like to rely on too heavily, but when you look at the price action and the other fib level, I've got around 61.8% fib getting overbought on the hourly chart, on the stochastic, and on the 4 hour chart as I look over there. So I think, again, it's worth a try for a short. I mean, you're betting on a stronger yen on both of these trades. So I'm not suggesting you should do both, or if you do, risk maybe 0.5% on each rather than the whole 1% on each one. Okay, they're all the trades I'm just going to run through today, but I am going to show you why it's so difficult. This is the Aussie versus the US dollar. The only the area I really would take a trade on here would be down at around 64.80, 64.60. That looks like a good support level to me, but anywhere else, it's all just so random and erratic. I mean, look at the Aussie dollar even just over the last few days, down, up, and then down again, and then up, and then down. There is no direction for the last 1, 2, 3, 4 days. We're just stuck in the range. And that's quite common. That's something I'm really seeing over the last few days in these Forex markets, especially the dollar pairs. And even then, we go back to the beginning of the year. This is 2023. There is no trend or pattern that I could really reliably, there is no pattern or trend that I can rely on here to identify a low risk trade. So at the moment, it really is a matter of sitting on your hands and be careful because tomorrow we've got CPI out. Later in the week, we've got the FOMC rate decision and the more important press release afterwards, where we'll get some sort of indication perhaps of what Federal Reserve Governor is thinking for future interest rates. So those events could certainly trigger some big moves. But if you've got positions over those numbers, it's going to be a gamble because nobody can predict what the market will do. Okay, I hope you have found that useful. If you've got any questions, put them in the comments box and I'll answer them as quickly as I possibly can. If you are not a subscriber, then go and have a look at my website, daytradeideas.co.uk. Now, the other thing you must do, if you've not already joined my free Telegram group, there is a link in the box below. You get free analysis, and sometimes I post my trade ideas sheet in there for free. And I've just launched an offer. If you want me to be your personal mentor for the next 3 months, I have an offer for you. Starts in January. If you're absolutely determined to become a professional trader next year, then you can join me from January. I'll train you personally for 3 months. We'll have regular meetings. I will teach you everything that I have learned in almost 40 years of trading. I will teach you that in 3 months, and I absolutely guarantee to make you a profitable trader. If I don't do it, I will refund every single penny that you pay me.